Just finding myself getting really frustrated because I felt kind of like hamstrung in my role.
Yeah.
And so one of my customers, who was a banking exec, came to me and he's like, he'd left the bank at that stage and he's like, hey, so I'm going to start a new bank. And I was like, who starts banks?
Yeah.
Like, what? I thought he was crazy. And he was like, you're the best I've seen when it comes to customer service. I want you to create that hyper-personal service that you deliver, but in a digital context.
Hi, it's Julian. I'm the CEO and founder of LoanOptions, and today I'm here with a very special guest.
Betsy Westcott, founder of the Inner Money Journey.
Thank you so much. I really appreciate your time today. Probably a long overdue catch up, actually.
Well, this is our first time meeting IRL, so nice to put a physical body to the name.
Yeah, it's great. I know we've had a couple of Zoom calls in the past and whatever, but it's just not the same. And so much has changed since the last time we caught up. So I want to hear all about it. I'd love to hear your journey from in terms of your background, where you found the entrepreneurial spirit to go out on your own. And I'd love to hear from the beginning.
Oh, go from the very beginning, like country Betsy, or should we fast forward?
That sounds interesting. Let's go into country Betsy.
Well, I grew up on a sheep and cattle station in far northwestern Queensland, so super isolated. Did School of the Air, which I don't even think they do quite like that anymore. But basically, we had a governess and a two-way, and would radio into class and do things like that. So I grew up in a very different environment. Always loved people, always loved travel, languages. And so once I got through school, I was like, take me to the big smoke. I need to be where the action's happening. Ventured down. Didn't mean to fall into finance, never planned on being a banker or anything like that. Thought I was going to be a fabulous hotelier, creating beautiful experiences with people. And I actually did do that and was working in hotels. And, I loved problem solving. I loved anticipating what a customer would want and just making them have the most extraordinary day. And whilst I was doing that, that's when I got discovered by a banker who was like, you're good with customers. Come with me. I'm working on changing the culture of my bank. So he hired me and kind of put me on a fast track through retail banking. So I had to be teller, home lender, eventually became a bank manager at the ripe old age of 22.
Well, I was just about to ask, how long did that transition? Because it's sometimes people get the inside track or the fast track, but it still can be a long journey. But yeah, that's a lot of responsibility for a 22-year-old.
It was, and it was funny because in the branch land, often your customers are a little bit more elderly, and I'm like this young blonde female, and they're like, hi, I'd like to see the manager. And I'm like, that's me. And so, I had some funny interactions, but really loved it. But got a little bit bored of just talking about transaction accounts and, personal loans and home loans. I wanted to know more, and the world of private banking came up as an opportunity. And in that, you get the full scope of banking from, foreign transactions and the day-to-day banking to helping people with their legacy and their philanthropic interests. So for me, that was Disneyland. I had a great time, met some amazing clients that I'm still really close with today. But what was happening at the time was that there was a lot of digital transformation going on, and the intention was to make that better for clients and better for bankers. But the reality is that for us as bankers, a lot of our power to make decisions was taken away. It was centralized. It made the process slower. It really eroded the trust and the relationship with our customers. And I was just finding myself getting really frustrated because I felt kind of hamstrung in my role.
Yeah.
And so one of my customers, who was a banking exec, came to me and he'd left the bank at that stage, and he's like, hey, so I'm going to start a new bank. And I was like, who starts banks?
Yeah.
What? I thought he was crazy. And he was like, you're the best I've seen when it comes to customer service. I want you to create that hyper-personal service that you deliver, but in a digital context, and helped me start this bank. So I joined them. That was my first foray into the fintech space.
Yep.
And
I was so hyped for Zinja. I was so hyped for it.
Same.
I was like, about time. I've always been really upset with the way that the service that you get from banks.
Yeah.
Even just when I started the business, like I'd been with this bank since they gave me the Dolomites account back in when I was in primary school. And it took me like 11 days to open an account. They did all these kind of checks. I went in person because I knew that if they ID'd me properly, it'll probably be faster. 11 days to get a bank account. I'm like, surely there's a better way than this,
Oh, and there is. And yeah, Zinja, we had such big hopes, and it actually achieved a lot. And, my role there, I was the first employee, and my role was to design and build and scale banking operations with a particular focus on customer service. And we had the Zinjarati, we used to call them, they're all the team. And, we really empowered them to go make a difference whenever they were interacting with customers. And it was magic. It scaled really fast, but when you're one of the first coming into market, you're learning as you go, you're building as you go. So, things like we were following a model that had worked overseas, but here in Australia, you just don't have the same capital of investment available, and you really have to get to revenue quickly.
Very quickly.
Yeah. And so releasing a lending product is essential, because that's how you make money. You take in deposits, you lend out money, and you take the margin in between. And they just didn't get there fast enough. So it didn't work out, but great lessons.
Can I tell you, there's really only one neobank that's been successful. They've since been acquired by NAB, but I think the really clever approach they took was creating a broker channel very quickly.
Yeah, get them doing the work for you. Amazing.
That's the fastest and easiest way to stand up distribution of a loan product.
Yeah.
And that's been my experience anyway. But I think, when they try to do B2C only, if you don't have a lot of capital, it's a recipe for disaster from what I've seen. And the other companies that kind of tried to do that, unfortunately failed. And I'm optimistic about the future of neobanks, let's call them. Yeah. There's one in the SME space that I'm pretty excited about, Parpera. I think they're onto something. It's probably the first neobank that's aimed at businesses.
Judo as well.
Oh yeah, sorry. Sorry, I forgot about Judo. So Judo is the first banking license outside the the kind of legacy institutions. But yeah, they're quite well known for their commercial lending. We use them a bit in our business. But yeah, just in terms of like a 60-second onboarding process to get, that's just phenomenal. That's what service should be. And that's what the tech is capable of. That's the honest truth. So.
Well, this was my motivation to go there. I was like, there's so much good technology today. And the challenge for established existing banks is they've got like years, decades of old architecture all trying to be like patched together, and it becomes this spaghetti sort of shaped mess. And so, it is a real privilege to try and build from scratch again. But, when you're sort of the first to market and you're trying and learning things, sometimes you get it right, sometimes you make mistakes. And, they've since sort of changed that pathway to getting your license now from the learnings of the likes of Zinja and Volts and so forth, where they are now requiring you to have a lending product before you even get licensed. So I think like Alex Bank, for example, is one that's followed that pathway. I don't know if they're a full ADI yet. Last time I checked, they were a restricted ADI, but, I think that makes a lot of sense, because we don't have in terms of like when you're raising money for a new business here in Australia, we're a little bit behind other markets, say the US. We're not as, the mindset of capital is very conservative by contrast. So you almost need to be a fully established business making money before you can raise it. So you've got to have, which makes a lot of sense in some ways. Like you've got to have the fundamentals right in business. And I think coming out of the cycle that we've just come out of, and now we're in tougher economic times, you're really seeing a big focus back on getting fundamentals right in business. Which I think is good. I think there was a little bit too much money flowing around. But
because it was all about growth for a while. What's your growth, and that's how much capital we're going to give you. And then after a while, some of the businesses weren't able to decouple their revenue from their operating expenses. So they just continued to grow, but their losses became greater. And now it's more about what's the path to profitability. So if you can demonstrate that, I think then in the capital markets, you'll do quite well. If you're already demonstrating profitability and you've got a working product and you haven't needed capital to get the business off the ground, you're just needing capital to scale, then I think there's a lot more appetite for that even in the current climate. But yeah, it's what would you say, like in Zinger, your experience there, like what was some of the best takeaways and learnings that kind of then, I'm assuming that was part of the inspiration for you to go and start your own business. You've obviously had some other roles between them, which we can touch on, but what was the...
So many lessons, some personal and some kind of, business related, global. So which ones will I share? On a personal level, I think really trusting in yourself and your instinct and things like integrity are so important in the way you conduct yourself and the way that you build culture. They're things that are built over time and they're things that you can lose in an instant. So something that I discovered is like just how strong that value is for me. I think in terms of when you're building stuff, that really taking the time to hire slowly, even though the pressures are there and you need to get the bums on seats quickly, finding people with, the right attitude, the right culture fit, the right skills set, and then building a really strong team from that's super important. And then also like taking your time with vendors, because you meet someone who's, trying to sell you their technology platform and they'll promise you the world, absolutely promise you the world. And if you don't do your homework, you can spend a lot of money on stuff that just doesn't work or isn't appropriate. And so, going down the pub with the sales guy and having some chats and you're like, he's a good bloke, sounds like a great product. Let's sign him up. No, do your homework, do your inquiries, because they can really make or break you, particularly when you're trying to build quickly and you've got limited capital. But what I also just discovered about myself is how much I love going back to first principles around how do you build stuff, how do you build it right. And I think since then, I've just loved that, like learning how to think. And let me put some context in this because it might not make sense. But what I found is like I'd grown up in the big corporate world, and whatever you did, there was a policy, there was a procedure, there was someone who'd done it before. And so you kind of just get into this habit of like doing things as they've always been done because it's like not that broken and you don't want to step out of the line and you just want to be kind of told that you're doing the right thing all the time. When you go into a startup environment, there isn't any of that. And no one's going to tell you what's right or wrong. You've really got to like think about it and come up with the solution yourself. And I just enjoyed that aspect so much. So that's kind of like, man, I've gravitated so much more towards the startup environment since then.
Well, I absolutely love the first principles approach. Like obviously Elon Musk is really big on it. And it makes so much sense when you think about it. It's the opposite of we've always done it this way.
Yes.
So it's really questioning and breaking down. Yeah, it's breaking down the problem at hand until it cannot be broken down. And you're really at the foundation and the core of the problem. And you think about what is the easiest way and the most, from a customer's perspective, what's the most seamless way to achieve this, whether it's onboarding to create a bank account or, let's just create a form that they need to fill out. Why? Yeah, so I really love that because what it does is it allows you to remove any friction from a process.
Yeah.
So obviously that was a situation where, a lot of people involved, like really, I feel like it was really close to being highly successful.
Yeah.
Sometimes in the startup world, they obviously don't, like, it's not all sunshines and rainbows, I'll put it that way. What was like the transition from there after you've Zinger kind of?
Yeah, well, I'd kind of got a real taste for the technology side of business, and I wanted to go and test the things that I'd learned in a corporate environment. I kind of want to validate what I'd learned, because startups can be scrappy and they're great learning places. But I was like, let me go test to see if I really do know what I think I know. So took a role with Macquarie Bank, supporting digital transformation for them. And it was really good. It definitely formalized a lot of the things I had learned and had kind of developed instinctively. But then I reminded myself that it was all a bit too slow in the big corporate world. And like Macquarie's an amazing brand. They're really market leaders. But in the particular role that I was in, I just kind of felt a bit constrained, and I wanted to get back to that people-facing side. That's what I was really missing. I had a little bit of it at Zinja, but I've just got this strong drive that I want to contribute a net positive in the world with my life. And the way that I can see that the most is when I'm doing one-on-one stuff with people and making that real change in, particularly around money, how they engage with it, how they perceive it, how they use it to then create a life that they feel really excited about. So I wasn't quite ready to go out on my own. I did have a side hustle as a financial coach then, but I still had this desire to do grand scale kind of stuff. And so went to Future You, which was a financial wellness app that was aggregating all your banking data, reading it to create insights around how you spent money and earned money and saved money, to then present you with different options around, do you want to borrow some money to tie you over? Do you want to, save? And there were ambitions to invest in there as well. And then they were also licensing that technology to other third parties as well. So I went and did that for a little bit. And then, recently when I became a parent for the first time, it was just a real, I don't know, you're also a parent. You can probably contribute this. It just changes your perspective a little bit around how you want to spend your time and what legacy you want to create. And mine just really shifted to, I want to run my own business. I want to be in charge of my own day, and I want to choose who I work with and who I'm impacting. So
that part's really important. And also I think part of the attraction to, starting my own business was because I did feel like, sometimes my suggestions or decisions were not, when I wasn't the sole decision maker or the key decision maker, I would watch people fumble around and make the same mistake over and over again. I'd make a suggestion, they wouldn't take it on board. And I just was so sick of that. I was just like,
it's exhausting.
I'm always somebody who's been I'm always really close to the front line. I still, till this day, I still speak to customers, because I want to keep my finger on the pulse. I want to see what customers are saying to me, because then when, one of the team come and talks to me about an issue or an objection or something, at least I can relate a little bit better. And I'm not hiding, I'm not sitting in some office in the corner, with a view in the background. I'm sitting like right next to the rest of the team, and I'm listening to the phone calls and, providing real-time feedback. And so to me, that was, really important and exciting to me, is like, okay, now I can make a decision. If it's a good decision, then, double down on it. If it's a bad decision, then quickly pivot and move and rectify, and like fail fast, learn fast, like just really, that was the part that's exciting. The thought of corporate, I've actually never, the only corporate job I had was when I was in school, really. I worked for, it's now a super retail group. I worked for Super Cheap Auto. And that was corporate, but it didn't feel red tapey. It felt like every store was kind of their own business, if that makes sense. And we all had targets and goals, and everyone in the store felt like they were working together. Head office, for the most part, left everyone alone. It was a good performing store. So that was really the only, but every other time I've worked in startups or small businesses, and it just suits my personality better. I don't like having to get 8 people sign off and having to do stakeholder management to get them on board. Like that to me is just so much friction and too many egos to worry about. So that was kind of what attracted me, is like, I can move really quickly. Somebody has a suggestion, we'll change the process like now, and we'll implement the suggestion now, not in 2 weeks, not I'll think about it. We'll just implement it now, and that's how we'll do it from now on.
Yeah.
And you watch how fast you can progress when you have that approach.
Yeah.
And you're listening to the people that are actually, doing the damn job. It's amazing how far you can come in a really short space of time. But I'm obviously a really big fan of that concept of giving people access to insights about their spending, their behavior patterns, like all of that stuff. It's something that's really close to my heart. I think right now there's not a lot of education on, like, even just to start a business, what's involved. There's none of that. Like, where do you go? You got to hope that one of your mates has a business that's similar to yours, and they can tell you, here's what worked, here's what didn't, and you got to start again every time. And so there's no real pathway to, like, here's, some templates, here's some education around what's important, here's where you should start, here's where your initial budget will be best spent. And then on the consumer side, less so on the small business side, there's, like, people don't really know what a credit score is. Like, you ask them, they're like, oh, it's like a magic number that kind of the banks give to me or think of me or whatever. And it's like, yeah, but here's actually how it works.
Yeah.
So that part's really, I see a lot of value in giving that to the clients and giving them information and tips and tricks about how they can improve their score, because ultimately that's what's going to help them in the future. If they want to buy a house, if they want to, improve their family's life, if they want to upgrade their car, if they, want to invest, if they want to, whatever they want to do to put themselves ahead, giving them resources and tools to do that is obviously, I think, So you went from, you had the side hustle. What was the switch? Was it your first child, or?
A couple of things came together. So came a parent, went back to work, and the company I was working for got acquired. And so pretty much all the team was made redundant. In fact, I think all the team was made redundant. And it was sort of the end of the year, and I was looking around at different roles, and let me just be honest, I was kind of addicted to my big salary and the security of a job. I'm naturally, I don't know, sometimes I think I'm a conservative person. Sometimes I think I'm a risk taker because I, pursue entrepreneurial stuff, but I think I'm just a bit of both. But, for me, the security and the well-being of my family was really important, and being able to afford the lifestyle that we want. And so I think having the faith in myself to be able to create that off my own back and not through a job was something that I really mentally had to overcome. And my partner was really great in that, in supporting me, because, in relationship, there's ebbs and flows, and you sometimes play different roles. So I'd been breadwinner for like the first decade of our relationship, and I think there was a little bit of ego tied into that, but there was also a lot of like, we need this. But sorry, it's a long-winded way of saying, like, it was that role ending, looking in the job market and just not really seeing anything that was really lighting me up and that I really wanted to do again. And I was like, do you know what? I'm just going to give myself 3 months, see what happens on my business side. Like, if I actually put some proper energy into it, because I was doing it on the side of a C-suite role and being a parent, and I was also running a business. I was like, let's see what can happen. And it really started to grow. I also created some other diverse income streams around the business to really bolster just the main bread and butter kind of services that I offer. And it's just gone really well since then. And so, 3 months became 6 months, coming up to 9 months. Soon it's going to be a year. And it just, and I never say like never that I wouldn't take on a role again, but for me right now, the work that I'm doing, the flexibility that I have, it ticks all the boxes, lights me up.
She said the work that you're doing, like, I think there's real purpose in making an impact.
Yeah.
That's a part
Strong
that
value.
often speak to people who are a little bit lost and not sure what to do next, and they're a little bit stagnant, and they're just like, what I do, I get paid well, but it's not fulfilling. I think the part that's where you get real fulfillment is making an impact, and that might be something really small and a one-on-one thing, or it might be impact at a wider scale for an industry or for a group of people. But what I've found is that's really where you find meaning and purpose. So to me, that's always what I've tried to do, is just like, how can I make an impact? how can I help people? How can I do things to change or disrupt the way that something's being done at the moment, whether it's lending that's not, or finance broking that's not transparent, disrupting the way that, people access finance for a car or for their small business. And so every time we hear a story or a case study that our team's done, like that's what just reminds me, here's why we do this. Here's what we signed up for. It's not about like the numbers or the shiny objects or the recognition. It's about how much your customers really appreciate what you're doing for them.
Yes.
That's always been the best part. When I see the 5-star reviews come in and I read them and they're like really extensive and like they really mean it. It's not just like, that someone asked me for a review, put it with no comments in there. They're like, this has changed my life. This is so good. Everybody else said no, but these guys found a way to get it done for me. Like and our company value is like, we screen when we're hiring. You spoke about how important it is to hire slowly. Before, like we're always hiring, and we never turn it off. And I've spoken about this before. I don't think that recruitment is a HR function personally. I think that recruitment is a sales and marketing function. You've got to attract the right people to your business. Zero chance that the best people in their field are on Seek. Look, they're picking out, and we see it. Like some of the absolute guns in our business, they didn't come to us through a job ad. They sought us out. They did research on our business, and they came and said, "I want to have a catch up, and here's what I can bring to the table, and here's why I want to like be at this place." But I think if you have that always on mentality, then you're never in a rush and you're never making desperate decisions on who to bring into your business.
Yes.
And we screen everybody with those 7 company values. And one of them, you spoke about transparency and integrity. Yeah. That's arguably one of the most important. If I get the feeling that you are a smoke and mirrors person, I don't want you anywhere near my business.
No, that's your baby. Keep them away.
That's right. So, and look, I could go on all day about it, but it's amazing when you use that as the screening tool for bringing people into your business, just how good the culture can be. Because culture, I would liken it to like a beautiful golf course, right? It doesn't just appear that way, right? Someone's working really hard, and multiple people often are working really hard to maintain that and landscape it and, do all the pruning and lawning and, everything else. If you just think that culture is going to be automatically perfect, and once you start a good culture that it's always going to be that way, it takes a lot of effort from everybody. So that's kind of my take on it. But how did you go from how did you go from your fintech and banking background into this financial wellness journey? Talk about maybe your relationship with money. Like, how did you come to terms with that? How did you decide that was a path you wanted to go down?
Yeah, it kind of came about slowly. So I joined the world of finance as someone who I had a business degree and I understood that. But when I got into banking, I kind of just started observing the way people behave with money. And I really noticed that, it didn't really matter how smart you were or how much money you made. What financial success often comes down to is, the way that you respond to money, the beliefs that you hold about it. And there is an absolute dearth of financial education. Most of us don't ever have money kind of explained to us in this coherent way where all the pieces of the puzzle are sequentially explained to us so that it actually makes sense. We often get things piecemeal and through different kind of mediums, and it doesn't always make a lot of sense. So the financial education is really important for doing well with money, but so much of it comes down to our emotional state, what we think about money, feel about it, believe about it. And I just was sort of going where does all this come from? And how is it something that we can individually curate, or is it something that you're just born with or not born with? So, and I would see so many different types of money relationships and behaviors and things in my job. So
yeah, we've all got the big spender friend and the one that won't open his wallet. It's got moths when they finally do open it. So we've all got those friends. And I think sometimes it's taught from parents or their culture or things like that. But it's always like a really generic, like you talk to, like I've got an ethnic background and everything was pay cash for everything, never finance, never. But the thing is that there are some situations where debt, where it can be leveraged, is actually a good option. You know,
can
if you're looking at
growth.
Yeah, absolutely. And if you can turn the $1 of interest that you're going to be paying on that debt into $5 of revenue or profit, then that makes a lot of sense for you to scale your business more rapidly.
Yeah.
But also there are some situations where, you know, debt can be a terrible thing, and people get addicted to to spending money that they don't have, which eventually perpetuates into a situation where they can't afford to pay. Yeah, it's a spiral. But yes.
Yeah. Well, like coming back to the story, like I thought at first it was education, that we just needed to understand money. And what I realized is whilst that's important, it's mastering that relationship with money that really creates the magic, because you really can't transform your financial reality until you work on what's on the inside. And unfortunately for most of us, that's completely unconscious. We're not aware of it. And that's because it's something that forms really early in life. Our relationship with money, our views about it, is largely set by the age of 7. And that's research out of Cambridge University.
Yeah, wow.
Think of 7-year-old self. 7-year-old Betsy, she did not know what was up. She certainly didn't understand income tax and investing or any of those things. And it's also why a lot of the time our relationship with money is a little bit like chaotic and conflicted, because we're making meaning and learning lessons through the eyes of a child without real understanding. And then it goes into our subconscious brain, creates a pathway of like, if this, then that, and then it just runs on autopilot. So, you know, so often clients would be like, I know I should be saving, and I've got these big goals, but anytime I just get the money, I just got to spend it.
Yeah.
And I just can't stop myself. Or, you know, it can even be around things like growing wealth and taking risks that, I grew up on a sheep and cattle station, as I was saying, and it was always like drilled into my head, save for the not so rainy day, because it was always drought that we're worried about. And so I was like really conservative, and like I literally saved for every possible scenario, but I found things like investing or starting a business like way too risky. But, you know, the rules for money are make money, keep money, multiply money. And I was missing that multiplier part because I was just so focused on like keep money to be safe. And that was really holding me back when I was younger.
And there are, simple, you don't need to be an expert on the markets to multiply your money, to use your example. There are situations where one strategy is not suitable for many people. One strategy might be hyper personalized to your specific risk appetite or your interests or causes you want to support or whatever it might be. But yeah, when it comes to investing, I think if you just understand the value in compound interest or compound growth, if you invest in an index as an example when you're 18 years old and, by the time you're 50 and you've just been investing a small amount, whether it's $100 a week or whatever it is, you're setting yourself up for a very large retirement.
Yeah, you'll be a millionaire by then.
Yeah. But none of that was taught. If you'd gone back to, 18-year-old version of myself, and I was a reasonably mature 18-year-old, but I've always been called an old man in a young person's body. But if I'd understood that concept, and I was always great at maths, but nobody explained, if you were putting away $100 a week, but at the age of 18 in an index that's growing roughly 9% per annum, just to use a rough number.
Yeah.
By the time you're 50, you've got a really substantial amount of money, and you can set yourself up and we're talking millions of dollars,
literally.
and so that, but everyone wants to get rich quickly is the real problem.
Yeah.
And even Warren Buffett, I think it was Jeff Bezos said, why don't people follow your investment strategy? You've obviously done so well. He's talking to Warren Buffett, and Warren Buffett says, because no one wants to get rich slowly. And I love that quote because it's so true. Yeah. Everybody's looking for the next thing, whether it's, crypto boom or bust, or, they're looking for, they're looking for the next thing that's going to make them rich overnight. And if they actually just put aside a small amount of money every week in reasonably low risk investments.
Well diversified.
Over time, there'll be years that are up and down, but on the larger, if you zoom out and you look at the larger picture over a 10-year period, let's say S&P 500, like that's grown, on average 9%, over the last kind of 30 years or whatever. So
yeah, and we always underestimate. We overestimate what we can achieve in a year and underestimate the 5 years. And I loved what you said, like no one wants to get rich slow. Although I will say shout out to Perla, who has the Get Rich Slow Club. I'm like, yes, Perla, they're an investing platform. But I love the mentality that they're perpetuating, because money isn't complicated. As much as, the financial services industry would like you to believe it is, if you got through grade 8 math, you have all the smarts within you to understand money and investing, wealth creation, all of it, starting businesses, debt. You can understand it. When you just put in some good fundamental money habits in place, do it consistently, wealth is inevitable. You don't have to have fancy strategies. You don't have to have a huge income. Wealth is a result of habit, and it's available to everyone.
It's very powerful. It reminded me of something, because when people have their basic needs met, food and things like that, then they can move on to the next thing and try and solve problems, right? But part of the reason that people aren't when they're 18, 19, they're just trying to make it in life. Some people have had adverse upbringings and circumstances, and so they're not focused on necessarily being rich by the age of 50. They're just trying to make
survive today.
Today and the next week and the next year. And even sometimes they can't even see that far ahead. So but if you can break down those and solve for those kind of problems where their basic needs are met, they've got a stable job, and they can start putting aside a little bit of money. And if their risk appetite is I just want to put a little bit of money and save it in a high interest savings account, that's okay. But if their appetite is a little bit more, then they can obviously start investing and doing those things. Now, again, it's better if you have a professional in your corner, but if you there's enough research that you can do online to see over a long period what has done well. And there's a lot of investments that you can make where you're not required to watch the charts every day, because that's,
oh my god, I have zero time for that. Like,
who
zero
does?
interest.
Everybody when they get into and start wanting to look at stocks and stuff, they think they're an expert day trader, and to me that is a recipe for disaster.
100%. Like,
and the market preys on people like that. It's literally how the markets are made. So your best bet is to just buy and hold something that has a long-term strategic value. Like if you were researching and understanding the benefits of AI 10 years ago and you're investing in a bunch of AI companies, like now you've most likely done very well. If you were trying to day trade those AI companies, you probably
would have got burned,
bombed out pretty badly a numerous amount of times as the hype cycle goes up and down.
Or just even like crypto. That's a classic example.
Crypto is a classic example because the amount of people that got rich just totally by accident in crypto makes people believe that everybody can do it. And literally some of them were flukes. But now they think they're traders. And some of the people that made a lot of money of crypto, like good, fair play to them, good luck. I'm not hating at all. They haven't built the required habits to sustain their success or wealth. So if they didn't make smart investments post making hundreds of thousands or millions of dollars in there, they're probably going to end up back at square one.
Oh, there's so much evidence of this. If you can't manage money when you're earning $50,000, you won't be able to manage money if you're earning $500,000. And, you look at the studies around lottery winners, who has the money. Quite often, 5 years later, all the money is gone because they didn't develop the fundamental skills. And it's not complicated. I mean, like I distill it down into the very, very basic, which is make money, keep money. So spend less than you earn and then multiply, get the money that you make growing for you.
There's a very similar stat around NFL players as well.
Yes, there is.
And a large percentage of them end up bankrupt within a certain period. I don't remember the study, so I don't want to misquote it, but people can probably find that online. It's crazy to me that they get paid all this money and they don't have anybody in their corner to help them make smart decisions. And you see some that have made some excellent, like look at Shaquille O'Neal. The guy's a billionaire now.
Yeah, Michael Jordan.
Michael Jordan is another one. They made some great decisions and and they leveraged money, so
if we go to music, Jay-Z, I love his one, if I can't buy it twice, I can't buy it. I'm like, everyone just adopt that one mindset and that would be good.
The amount of things you would not buy would be incredible.
Yeah. Well, it's so funny, like, working in the industry that I work in, I often have clients that come to me and, they go, oh, I've really worked on my mindset. I'm calling in abundance and blah, blah, blah. And what they're really talking about is they're calling in their ability to make money. They're focused on, how do I up my income? And that's good. That's great. By all means, up the income. That's an accelerant of wealth. But if you only focus on making income and then you don't know how to then manage the money that you earn, it will slip through your hands.
Yeah.
And then you're stuck on this never ending cycle of earning. And then you get to the end.
Upgrading your lifestyle the whole way. Yeah.
All the time. Yeah. And then you get to the end of your life and all you've got is like shoes, cars and clothes to show for it. And if the money stops, you're really vulnerable because you don't know how to survive without that endless income. And so it's about, make money, but then you got to learn how to keep some, and the money that you keep, you then need to learn how to grow so that it doesn't matter whether you're working or not, your money does the work for you. And that's true freedom.
We're seeing that a little bit now. You're the expert here, not me, but you would probably have had some customers that are coming through talking about the fact that they took out an investment property and negatively geared it, and now they've got, with the rate rises, more than 4% higher, and we're seeing a lot of people really struggle. Like even I have I wouldn't say it's a big mortgage, but my mortgage payment's more than $2,200 a month, more expensive than this time last year, which is just nuts. It's so bonkers.
Huge, yeah.
And that obviously happened really quickly. So, when it happens really quickly, you have less time to adjust and recalculate your budgets and stuff like that.
Yeah.
But I've seen a lot of people come to me like, I bought these investment properties when the money was free and we could afford it, and it was negatively geared, but only a little bit. And so, I could afford the gap until I got my tax return, and kind of was able to close the gap. Now the gap's huge. And so they're struggling with the cash flow side of funding that property. And so that's why the investment strategies got to be different for everybody. Everybody's got their own tolerance and appetite to spend or invest. And, a strategy that may have worked better may have been to positive, like find a property that's got a relatively low value with a great rental yield, that's positive cash flow. So even if the mortgage goes up, it might still be positive cash flow, or at the very worst might be break even.
Yeah.
That allows you to continue to accumulate more properties with that type of investment strategy rather than negatively gearing where your serviceability dies very quickly.
Yeah, because the primary driver there is that like I'm trying to get a tax benefit.
Yeah.
When you're investing, what you're trying to do is to buy something that goes up in value and buy something that creates income.
Yeah.
And if the value of what you bought is rising so rapidly that outweighs the cost of that negative gearing, maybe that works. But, again, it comes back to what's your goal? What is it that you're trying to achieve? And does that strategy actually fit your goal? And does that strategy, survive a stress test? Because it's very naive to assume that everything will be as it always is.
Yeah.
Like, what's happened in the past isn't a reliable predictor of the future. So, I very much see the benefits of a negative gearing strategy. But again, make sure you really understand what it is that you're investing in, and
what the risks are.
Yeah. And if you don't know yourself, go get advice. It's worth the money.
Yeah, absolutely. I couldn't agree more. Like, what are some of the top tips that people can do, like the quick wins that people can do to improve their relationship with money and, I guess, improve their financial wellness?
Yeah. Well, on the understanding their relationship with money, one, get aware of it, because like I said, it's a little bit like the iceberg. We might know a little bit, but there's a lot more going on underneath. So examining that, and you can do it in really quick and easy ways by doing money personality quiz, or you could go through a bit of a journey with someone like myself, a financial wellness coach. Then it's when you are aware, it's honor what's good, because there'll be some stuff that you do really well. So you want to do more of that. But then the things that are, getting in the way of your financial well-being, that's the stuff that you really want to work on and reframe. So, if you're someone who's a bit of an impulse spender, practice putting in place things that slow down your decision making. So whether that's a 24-hour rule, whether that's unsaving your credit card details from the click add to cart, or deactivating Apple Pay.
Yeah, Apple Pay is, it makes it so easy, right? Yeah.
Right, so easy, too easy sometimes. Yeah. And so if that's something that you struggle with, well then put things in place that kind of counteract that. Then just focus on learning one new thing that you can about finance every day, whether that's listening to a great podcast or, finding a mentor in this space or finding your tribe in this space, and just commit to getting more educated, because money really is fundamental to our well-being. On Maslow's hierarchy of needs, they've got, down the bottom, it's all like food, shelter, water. But given the way our society is organized, money should be there too, because we're not, bartering and trading with each other. Money is our currency. You need it to access food, to access shelter. So it's this tool that is really fundamental to our safety. And if we know how to use it well, it can really work for us. But if we don't take the time to learn how to use it, it can really make life hard. So committing to learning about it, and I don't know what else.
No, that's great. That's so great. You touched on a number of points there. And I want to kind of talk about the anxiety and I guess stress that's caused by financial problems. Like we've seen, people that we know, family members, whatever, sometimes their marriages, sometimes their relationships break down purely around issues with money. Yeah. And it can make a bad problem, obviously can exacerbate the problem. Yeah. It can make a bad problem seem much worse as well. But what are some ways that people can take that stress, that anxiety, and try and channel it? Because some people, when they're under that stress or experiencing anxiety, they go into their shell and they do nothing about it. Yeah. So what would you say is the number one driver to actually take action to get yourself to a point where you're not up all night worrying about how I'm going to cover this bill or that bill?
Yeah. Okay. There's so many things I want to touch on here. Yeah. So one, let's just talk about the prevalence of financial stress, because right now it's rife. We've got rising interest rates amongst inflation, the cost of living's going up, and our wages aren't keeping up with that. And that is particularly for younger middle Australia, it's really hitting hard right now. So 1 in 4 Australians are struggling to make ends meet right now. So if you're feeling
that number's
bad,
crazy. Yeah.
It makes my chest clench just thinking about it, because it is. It's money is fundamental to our well-being, and when we've got stress around that, it affects our health and our sleep and our mental state, our relationships, our performance at work. A shameless plug. I've just created a course with David Koch, or Koshi as he's better known, which we're releasing soon, purely to help people deal with financial stress.
That's amazing.
Yeah, I'm actually really thrilled about it. Because it's Koshi and he feels like, the OG of personal finance. But because it's something that's just so needed right now, and it is something that you can overcome, but putting your head in the sand only makes matters worse. So one of my favorite exercises when you're feeling really overwhelmed by the financial situation is what I call the taking control and letting go exercise, which is basically you take a piece of paper, draw a line down the middle, say, what can I control? What can't I control? And on the side of what you can't control, it's the things that are genuinely out of your control. So interest rate rises, the economy, the cost of living, you can't control that. What can you control? You can control where you spend your money. You can control what income you earn. You can control, sometimes the interest rate that you're paying. Writing down all those things. You can control how much exercise you have, whether you ask for help or not. And then with that list, anything that's on the outside of your control, ignore it. Put it over to the side. Don't waste any energy. And then systematically work through, okay, what's within my control and what can I do about it? And it really takes it, reframes it from this is happening to me to this is what I can do about it. Yeah. And it gives you some power back, because it can feel like you're drowning when you've got that financial strain on you. And, it really does impact relationships. Money's the number one driver for divorce in the early stages of marriage, money stress. And with some good communication and coming together as a team and collaborating on solving the problem, you can overcome that, and it doesn't have to cost you your marriage. But it's not something that just happens. You've got to put in the work, and you've got to commit to yourself that you want to do better. So I hope that exercise is helpful.
That's really great.
Big topic.
Yeah, it's very insightful when the way you talk about it, because it's a lot of people may already have these kind of instincts about the way they're looking at money or spending money or whatever, but it's really nice to hear you articulate it so well, and then it makes it easier for everybody to understand and go, actually, yeah, these are the because like the psychology of spending, like, yeah, every time I'm stressed, I just jump on the Iconic or whatever and just start buying shoes or whatever it is, and then if you put that 24-hour block, on your thing, then that's one thing you can do to implement right away, and then your the other aspects, like being able to control what interest rate you pay, that's a great way of looking at the problem. So I really like that. It's
so funny. I'm often invited on television to talk about like different money hacks and stuff, and there's all the little ones like meal prepping and turning off the lights, and they're good, but like if you want to go like big hitting ways to save cash, it's like negotiate your bills, negotiate your interest rates, because one, most of these big companies want you as a customer, so you've actually got a lot more power than you realize. And like, say you've got, let's go with like a sizable one, say you've got $1 million home loan, a 1% interest rate savings, 10 grand a year, like that's crazy. Big bickies, in my book anyway.
Yeah, absolutely. It's a really big number, and you think about how many expenses would you have in isolation in your household that are $900 a month. Yes. And I think that's where we see our business obviously playing a big role there. We're seeing a lot of people that want to either consolidate debt, because at the moment they're paying a ridiculously high repayment across multiple loans that have a really short term. And when the interest rates were low, that was maybe a good strategy, so you could pay it off really quickly and pay less interest. But as all of the cost of living and the interest rate rises, or even if you're not a homeowner, your rent, the increases in rent, sometimes through situations like we are in the economy at the moment, it is a smarter decision potentially for you to take an approach that, like, I'm going to minimize my mandatory spending. So I'm going to extend the loan term a little bit on my home loan. I'm going to extend the car loan a little bit. I'm going to extend whatever it might be. That doesn't mean you can't pay the amount you were paying. Let's say you had a 3-year loan term on a car. Doesn't mean you can't still pay whatever it is, $1,000 a month to pay it off in 3 years. You can still do that. But on the months where things are a little bit tighter, maybe around Christmas, you can always revert back to pay the minimum. And so that's what we're seeing a lot of people want to do. And we're seeing obviously the use of our tool to compare different loan offers and see what the best one in the market is. Like, it's actually helped our business quite substantially. So I'm interested to see how the next 12 months plays out. Because what I see after the rates start reducing over time, you'll be a lot of people that took out fixed rate loan contracts on cars or whatever that were at, let's call them recent highs, not record highs, I guess, but recent highs. And they'll want to be, refinancing into a low interest rate as they, hopefully come down or taper off. Fingers crossed.
I was very happy there was a pause this week. I was like, oh, thank you.
It's any bit of reprieve we can get is great.
I appreciate that.
If you had to pick like one thing that you wish you knew back when you were younger, maybe when you were a branch manager at 23 or 22, sorry. What's the one thing you wish you knew then that you know now?
There's a million answers I could give to this one. For me, it was realizing that life has ebbs and flows, and like you'll probably never be richer than you are. Well, no, let me rephrase this. The cash flow that you have available to dispose of in your 20s and early 30s is at an all-time high, because once you've got a mortgage and you've got kids, like your available cash is challenged a lot more, because you've got more people that you're responsible for, and you're paying for more things,
school fees or education or whatever it might be, or all of those costs you never really thought of before.
And you're like, damn, wish I thought about that. So I think it's like really just loving yourself enough to make your financial well-being a part of your well-being practice, part of your self-care, and thinking about, how can I optimize the opportunities around me, and really aligning what you do with your money with your values. Now, that's not to say you need to be like sober Sally staying home having soba noodles on a weekend. I don't mean it like that, but it's like just being really conscious. Okay, do I really value experiences? Well, how can I make sure that I can make the most of my available cash flow right now to make sure I get those holidays overseas while I can, and stuff like that? Or, if I really value security, how can I accelerate my rate of saving so that I can get into a home and start a family if that's important to me? So really just, because when you're young, time is like a superpower, especially around wealth creation. And the sooner you can start doing small things to grow your wealth, to multiply your money, the more you can achieve. And you don't even have to do, like, the effort you make is so much smaller to achieve really big results. If you kick the can down the road until you're 30, you're 40, you're 50, you have to put away so much more money to achieve that same result. So make the most of your youth, because it literally is a superpower.
Yeah, and the difference between starting to invest using that same example as before in an index, between you doing that at the age of 18 or 20 years old, whatever, versus even just 30.
Yeah.
Like the compound interest over 10 years, not immediately, but when you're 40 or 50 years old, 60 years old, it's crazy. And I don't think people that listen to this should run that exercise. Go and find the compound interest calculator.
Moneysmart.gov.au is your friend. No one's trying to sell you
great
anything.
Resource. Yeah, great resource. What would you say, like, Betsy, what would you say the most common challenges that people coming to you with that you're helping them solve or giving them the guidance to solve?
I would say I do a lot of couples work. So sometimes developing a language to discuss money in a relationship that isn't fraught with emotion is probably number one. But the second thing is actually aligning their money to some goals. What is it all for? We go to work, we do the thing, we make this money, and then we don't really think about what we're doing with it and what is it all for. We just kind of let society tell us where to spend it and what to do. And then, people often feel quite lost. They're like, gosh, I know I wanted this thing and I just don't know how I'm ever going to make that happen. So one of the biggest thing I help clients to do is really articulate what is it that they want out of life, and then aligning the way that they organize and use and invest their money to actually helping them achieve that. Because like I said, if you don't have a plan for your money, someone else is going to have a plan, and it's probably to be for you to spend it.
Yeah, that's true. Yeah, I mean, I feel like sometimes I just have a dream about something and I'm getting served ads. I mean, the algorithms are so crazy. They're designed for engagement. Yeah. They make you buy things that you don't really need, and often it's just clever marketing and ad targeting. So, I was making a joke with a mate the other day. It's like, they know exactly when you've had a bad day on the golf course, and they serve you ads for these beautiful new golf clubs. And you're like, yeah, I definitely need them.
Need that.
That's definitely going to help my game. It's not because I suck at golf.
No, definitely the golf club.
But, in terms of like long-term financial security, like what are some of the common misconceptions? So
well, there's a couple of them, and first of all is just understanding how our brain works. Our brain is wired for instant gratification. So one of the reasons we all struggle to create long-term financial security is because our brain is telling us to spend now, have the treat now, get the reward now. And so, if we don't have really clear goals of what it is that we're working toward, what's the future that we desire, our brain's always going to trick us into just focusing on now. And then that goal never becomes a reality, which is a bit of a tragedy. So one of the biggest misconceptions people have is that they don't have a goal for what they want to achieve and what life that they want. The second thing is that saving is a great long-term strategy, having cash in the bank. And, what we know is that savings are essential for cash flow in the short term. So, if you've got a goal that you want to achieve in the 1 to 3 years, great idea. Keep the money in cash for that. If it's your emergency savings, the financial cushion, or I like to call mine my financial ride or die. It's like my best friend that'll get me out of a tight spot. Your emergency savings, definitely keep that in cash. But for anything long term, finding a suitable investment strategy to grow it so that it grows faster than inflation and you keep that buying power is actually essential for long-term wealth. And again, that means you're going to have to learn the foundational concepts of investing, and you're going to have to do a bit of homework, but you're going to be richer for it. You're going to be better off for it. So they're kind of like two of the misconceptions. Learn how to hack your mind, have a really good goal, and for long-term goals, use investing as a way to get there.
I'm just going to touch on one thing really quickly, because this is something I learned reasonably, like in the last 10 years, reasonably recently. And it was about the impact of debt during times of inflation. So one thing that's very interesting is that during inflation, when property prices are going up, when all asset classes are going up in value, stocks, shares, all that kind of stuff, debt actually, relatively speaking, shrinks. Because, let's say, for example, the property price increases by 30%, the debt doesn't increase unless you're redrawing on it or whatever. But so in times of rapid inflation like we're experiencing now, the impact of having debt is actually the more inflation there is, there's kind of relatively speaking, not in absolute numbers, because obviously your debt doesn't shrink unless you pay it off. But relatively speaking,
it actually grows if you don't pay it off.
If you don't pay it off, exactly. Relatively speaking, debt actually shrinks proportionately to the asset value,
provided it's an asset. So that's the key difference. So that's
not your Europe trip.
Debt. No, not the things that you bought, you drank, you wore, you went to. So if you're buying a asset, something that goes up in value over time, so maybe shares in a company or a home or something like that, then by all means. If you've borrowed money for something that is consumed and goes down in value, then no, that doesn't work for that situation. You're just going financially backwards.
Just talking while we're on the topic of debt, but what are some strategies that you're seeing people have success with and assuming this is their goal, to actually become long-term debt-free?
Yeah, that's always the goal, because debt is a great tool for buying something like an asset. It can help accelerate that. It can
Let's use the Australian dream of buying a house, right? And owning your house outright. Like the thought of that, and the investor hat is like, no, as soon as you've got equity, use it to buy another house. So really it's a situation where but that may not be your strategy. You might be totally comfortable with just having one property that you own outright that you can call your own.
And this is why personal finance is just that. It's personal. You got to find the right strategy for you. But if you have consumer debt, as we like to call it, or bad debts that tend to be expensive, they tend to be over 10% usually. And it's money borrowed to have an experience, to buy a white good, to buy a car, to, pay for something that once you've consumed it, it has no more value. Ways to get on top of that. Number one, you got to write down and get really clear. What is my financial situation? What do I owe? What's the interest rate? What's my minimum repayment? Then you've got to develop a strategy for paying it off. And that's going to involve looking at, okay, how do I make sure I'm making at least the minimum repayments? And then how can I find extra cash to pay it off quicker? Because once you've made your minimum repayments, any additional repayment you make just goes to paying that debt down, and you're saving money not only on the interest, but you're going to be debt-free faster, which is great.
I love those apps that do like rounding and things like that. Yes. So we've spoken about this in the past. It'd be awesome if we were able to offer some of our customers the ability to round. Like you buy a coffee, it's $4.50. That 50 cents gets put straight on the loan. I know there are some providers that do it. But that concept is really cool, because I used to do the same thing with change. Like cash is obviously less used these days, but I'd give, like, whether it was, a barber or, a small business, you give them a note. They give you, a couple of dollars change. It'd sit in my pocket when I get home, and I empty my pockets, put it in a coin jar. And then at the end of the year, you've got like $1,000 just sitting there. So that $1,000, if it was not sitting in the money box doing nothing and actually reducing my loan balance and paying off interest, the concept is awesome. So
yeah, because every little bit counts, and that's why things like things like offset accounts or using your tax return or a bonus to pay down debt is such a powerful thing. And there are calculators that can show you, if I just make an extra $5 a month in this repayment, how much interest will I save? How much faster will I pay off the debt? And those numbers are really powerful. I did it for my husband the other day with a home loan. Call me for an exciting conversation. But I was like, honey, look at what our offset account's doing. And he's like, cool, babe. Yeah. But those are really powerful things. So finding ways to make extra payments, whether that's through extra income and picking up a second job, or reprioritizing some of your spending, it's going to save you money. You're going to be debt free sooner. If you get a bonus, if you get a windfall, putting that on those debts as well. And then things like consolidating, because not only is it a lot of like mental arithmetic to remember what repayments coming out of where, but by consolidating, you can often get it onto a single payment, get it onto a cheaper rate, and have a strategy to pay it off sooner. Because, for example, with a credit card, when you pay it off, that credit line is available again, and you might get tempted to spend it. If that is something you struggle with, consolidating to a structured repayment format with say like a personal loan is actually better for you, because it keeps you on the straight and narrow. It doesn't create new temptations to spend that way.
Revolving credit facilities can be a trap and you know what, they can also be, if you're very disciplined, they can also be great to have. Yeah. The one thing is you have to identify, maybe your money quiz might help with that, but you need to identify what type of person you are and what's your relationship with money. If you are highly impulsive, a credit card is so dangerous. Your mates are going somewhere, going on an overseas trip. Like, you don't really have the money, but you know the credit card's
YOLO.
there. Yeah, definitely YOLOing into a Europe trip.
So true, yeah. So know thyself, like know what your wonderful traits, and also know what your little shadows are, and like put things in place to overcome them.
Maybe it'll be good to touch on some of your success stories that you've got with some of your clientele. I think the one thing that's super powerful in our business and is just when you present a case study of like, here's a real life situation, here's the problem that the client was facing, and here's what solution was suggested, or here's the solution we provided, and here's the improvement that it made. So it'd be really good to hear, because I think the work you're doing is just absolutely amazing. I wish there were more people just like you, and I hope people listen to this and go, I've identified that I'm somebody who needs help and reach out to you. So
yeah. Well, I've been doing this for a while, so I've got lots of different ones. For example, I had a young lady, I'm going to call her Tara. That's not her name. But, she'd moved out of home, and she had moved to a big capital city. She was from a country town and was looking to make friends and kind of find her way. And, also it was like her first time living independently, paying bills, so forth. And so, she had a pretty good job, but the salary didn't really match the lifestyle that she wanted, and she'd sort of fallen in a crowd with some girls that were very much financially supplemented by mum and dad, and so they didn't have the same bills to pay that she did, but she wanted to keep up. She didn't want to get left behind, and so she kind of fell into the trap of using credit cards and buy now pay later here and there, and she was always making the minimum repayment, so she didn't realize that didn't actually pay back the debt. And so, suddenly she found herself with like $30,000 in credit card debt if she was maxing it out. And it was just creating literal like health problems for her from the stress of it. And so, that was just a classic case of she didn't have good financial education, and she didn't have a system for managing her money, and she just wasn't sure what she could do to get help. So, we really sat down and we just kind of took stock, like, what's going on here with this situation? I showed her how just by making the minimum repayment, she was going to end up spending over $90,000 in interest, and she would pay it off in 58 years' time.
Yeah, the first time I ever saw, because I was always anti-credit card, and that's probably to do with my culture and upbringing. Yeah. And I was like, I know these are dangerous and, in the wrong hand. But when I got my first mortgage, they're like, no, this just comes with it,
Yeah.
And so I didn't want it. I asked for them to remove it. I literally asked, and they're like, no, it can't be removed, which is crazy to me that you're allowed to do that. But anyway, that's a different story. I got the credit card statement and it said if you pay the minimum repayment, it was 40 plus years. And I was like, oh my God, like that is just absolutely nuts.
Yeah. And now they have to put that in there. That's a recent legislation because before they didn't. And people are like, oh, that's the big highlighted number. So that's clearly what I need to pay. Not knowing that that was catching them in a debt cycle and they're actually spending 3, 4, 5 times the amount that they'd borrowed. So for her, we set her up with a system. First of all, we created a money management framework for when her money came in. Some went over to paying bills. Some got allocated for spending and having a good time because you want to enjoy life. And then a large chunk got allocated to paying off that debt, which then got allocated to building up her emergency savings. And once she had that, it went to building up her, like towards her goals. Yep. And I showed her, like, if you just triple your repayment on this credit card, you will have this paid off in 1 year. And it was just like in 1 year's time, you can be debt free. You can start building security. You can start, moving towards those other big goals that you have in life. So that was a fairly simple one. I'm working with a gorgeous client right now who has been in a relationship since she was 18 years old. They've had a great life together. They've bought homes. They've built a family, but the relationship's broken down. In that relationship, the roles that they played was she looked after the family. He did the money and the business stuff. She's coming out of this relationship for the first time. She's going to be, on her own, independent. And she's just feeling really anxious around, like, I don't trust that I've got all the knowledge to make good decisions for my family to ensure that even in this divorce settlement that I get an equitable settlement. I'm really scared that I'll accept something that's not appropriate and then I'll, be financially struggling, even though they've built up quite a wealthy life together. So with her, I'm helping her, one, change her relationship with money because she's got this view that she's not smart with money, even though there's all this evidence about things she's achieved. Because of the role of the relationship, she's just like, yeah, I'm bad with money. I'm bad. And I'm like, so one, we're working on overcoming that. 2, we're building her capability to understand, okay, well, like, how do you organize your bank accounts to support the day-to-day? And then we're building her capability around home ownership, around how does she make the most out of her super fund? How does she invest using a goals-based strategy? And then also introducing her to people that can support her journey, because I'm just one part of the story. So, we've got her a divorce lawyer to help her kind of ensure that the financial settlement that she gets is appropriate, to ensure that, her and the kids are safe and have enough financial security. We've got a financial planner to help her with a lot of the long-term planning and give her personalized advice. We've got a mortgage broker helping her find a home to live in. So really building like an A-team around her, and the transformation in her confidence has just been phenomenal. Her bank balance is reflecting it as well, because there was a lot of kind of emotional spending going on, and it was a way to kind of self-soothe. She's going through some shit right now. Like, you can understand, but she also knew that wasn't actually getting her to where she wanted to go, which was to feel secure, to feel like she could provide for the kids and stuff. So, those are 2 examples. I could go on. I love talking about this.
Like, just fast forward a little bit. Obviously, there's a lot of innovation in the fintech and financial services. What are some of the biggest changes that you can see coming or have already are already here that are shaping the future of the industry, and that includes people's money management and other things? So.
Yeah. Well, the biggest thing that I love is, there's so many, but one, using the data that all the banks have to be able to kind of put insights back into the hands of customers so that they can very quickly make sense of what's going on with their money and make better and more informed decisions around it. I love the competition that it's creating, because once upon a time it was so hard to switch your bank account for a better deal, but now you can switch it so easy and get better interest rates on your savings or a cheaper interest rate on your loan. I also love that it's democratized things like investing, and you can invest with small amounts of money and you can follow the investment strategies of other investors, and you can get part share parcels and things like that. When my first investment, Telstra shares, back in the day, I remember my dad took me down to some broker's office. This was in Yeppoon in Queensland, and like had the old blinds that would go clang clang on the glass door, and there was like a fern over on the side, and I had to go to him with my little check that I'd got from the bank check, and give him my money, and then he would do the trade, and it probably cost me a couple of $100 to just buy $1,000 worth of shares.
Wow.
Whereas these days you can do it digitally, it's much cheaper, you can invest in other markets. So I think that's really great because it's putting the hands back in consumers. Those are some of the ones. And I'm looking for right now, the fintech space is quite fractionalized. Like you've got lots of companies that do very specialized things. What I'm hoping is that there might be a bit of a consolidation, and those microservices will come together to create a really holistic view for an individual of their whole financial life and enable them to make better holistic decisions. That's what I'm hoping for. That's
great. And I think you're right about them coming together. It would be, because everyone, what I've noticed is everyone thinks that they've got like a secret sauce and, and so it does create that fractionalized environment. But my hope is that people focus more on creating an ecosystem for people.
Beautiful.
That means that somebody can let's say they buy a car, they can access funding to buy that work or whatever it is that's going to help them grow their business, and then they can be connected with payment services that might help them transact in their business to help collect money for their business faster. So the ecosystem can go all the way around and add real value. I think by itself, any one of these fintech companies are great, but together the amount of power that can be leveraged is phenomenal. So I'm most excited about that as well. How do you see like consumer data right and open banking and that side of things? Obviously people can have more control over their data, but also the ability to stay connected so they can continuously get insights and not have to rely on their bank's app to provide a service. You can have third-party companies that are building really innovative.
I'm all for it. I'm very excited about it. I think, there's a piece to educate the consumer on like why this matters and why this is powerful and helpful. But yeah, I'm all for, because banks have a very important function. To expect them to also be the market leaders on, technology services and insights is a big ask. Some banks are doing a really good job there, but, why not let people play to their strengths? If there are companies and providers that are really good at building apps that give you insights around particular things, and you can connect the data to that, you don't have to switch out of your bank or anything like that, but you can get better services, better insights. Why not? Like win-win, I think.
That's the key part there, like actually having actionable insights. Like, hey, here's how much you spend on Uber Eats comparatively to the rest of, our audience or our segment or our customer base. Yeah. If wow, I'm spending 50% more on Uber Eats, like I better start doing meal prep, to your point before. Or, like just understanding, maybe I shouldn't order off the Uber Eats app because I know I'm going to be charged more by using the platform. Because like you go to a pizza shop, if you order from the pizza, you just pick it up. You'll save $20 or $30 here, and that's $20 or $30 that can pay down the credit card. And if you do it enough in a month, you might have paid $200 or $300 more off your credit card or whatever it is that you're trying to pay down. So,
and even just being like, you shop at this place, here's a great deal, or you're paying this interest rate on your personal loan. Here's some providers that based on what we can see in your data, they would be someone that you can access a loan from. Or even just like giving you a heads up that, based on your cash flow cycle, you're probably going to run out of cash before the next payday. Do you want to make some different decisions on the weekend? Just all of those things to make life better. That's what I think technology is here for, is to help us live better. Sadly, I think for a lot of us, it's enslaving us more, but hopefully we can kind of turn the tables on that and use it as a tool to support us more than anything.
Yeah, I do agree. There's a lot of people that just have their head buried in the phone, and that's how they deal with it. Their life, it's they're not really taking responsibility for their financial situation. Instead, they're just scrolling mindlessly,
And they're so addictive. I also have very strong feelings against young people having access to social media. This is like pivot, but
no, I agree totally. I mean, I got to be totally honest. I was anti-social. And this is why people say I'm an old man in a young person's body, but I didn't have Instagram until 2015, which is, I mean, I still don't have Facebook. So I've just basically used LinkedIn and Instagram. That's it. So but you know, I finished school in 2010. So I went through, you know, the whole high school thing and even, you know, 5 years after that, still didn't have Instagram. So I was always against it. And, you know, I've got a much younger sister. My younger sister's 16. I'm like, no, trust me, it's for your own good. And some of her friends have been on Instagram since they were 8 or 9 years old and stuff. And I'm just like,
so young.
Just watching how much it's affected them, just their personal body image and all that kind of stuff, the real lack of confidence, because, you know, everything they see on Instagram is so visually appealing, and, you know, and it's just
perceived as real. It ain't real. It's not real.
The tech and filters that can be applied can make me look like, you know, a really young man or a really old man or a really skinny man or a really fat man. And so none of it is real. You know, it's only going to get worse. I think you see those like augmented reality goggles and stuff. You could, you know, just spend your entire life in a virtual reality world. I'm really concerned about that as well. So
I think particularly when your brain is young and still forming, and you're so impressionable. Like I must be a few years older than you, but I think Facebook came in at university, and we were part of the generation who didn't realize that, like, once it's on the internet, so you'd go to a party, take 100 photos and upload the whole bloody thing. Dumb. But we just didn't know any better. But like, if, you know, I had an eating disorder when I was younger. If I had also like Instagram
oh my goodness,
and also like accessibility to all my friends, like we had MSN chat, like wow.
I was on MSN too. I reckon we're pretty similar in age.
But like, you know, that was a lot in and of itself, but at least we got a break from each other and the schoolyard and things like that. Like, had, you know, 14, 15-year-old Betsy had Instagram, I think the experience of, you know, that eating disorder would have been 10 times worse. And I'm just so grateful I didn't have that. And
thank you for sharing that. I know it's highly personal, but it's to me, it's exacerbating all, like, social media exacerbates any potential issues that might be there, whether it's your self-confidence, your self-image. And I think it's really hurt a lot of people. And there are some good things about it. Yes, you can stay connected to your friends and family overseas, and there's lots of really good things, but it's too easy to scroll and look at the explore page. And then, you know, I mean, if you're I hope this doesn't get taken the wrong way, but if you're a bloke, it's all, you know, very attractive women wearing not very much. And if you're a woman, it's probably the opposite of that.
It's probably the same, basically. Being like, this is what you should look like.
Actually, good point.
It's basically just full of women. Just one more thing. I want to, like, we have a tradition here, and we'll get to that in a second. But essentially, I want you to give me your best 60-second pitch about your financial coaching platform and about your business. But before you do that, I'd like to understand what your long-term vision of your platform is, and where you'd like to see it go, and where you think it will end up. Yeah. I would love to expand it to have more people doing what I do, because I'm kind of the hybrid between a financial counselor and a financial advisor. And I really harmonize the relationship with money with that capability and confidence building. And given how expensive financial advice is, and given the lack of financial education, I just feel like there's such a demand and not enough supply in that space. But my goal one day would be to have a financial services platform that had digitized banking services and education services coupled with financial coaching, that then like led into, you know, meeting all your financial services needs, whether that's buying a home, investing, getting strategic advice, that whole ecosystem, but one that was really designed to help people, match them with like the right advice, the right services at that right time in that really hyper-personal way, and doing it in a way that was really ethical. And that would be my goal.
That's amazing. That's phenomenal. I can't wait to see how this ends up over the next couple of years. But yeah, is there anything else you thought would be important to cover? Like anything else?
just that practicing financial well-being should be part of your everyday routine. I think that's my key message. It's just like going to the gym. It's just like eating good, nutritious food. When you take care of your money takes care of you, and it is an incredibly powerful tool for creating the life that you desire. So yeah, just got to give it some love.
Amazing. No, I really love what you're doing. Thank you for sharing so much really insightful info. I think people are really going to love this. And yeah, so now
the pitch.
Give us your 60-second pitch.
I don't know
Betsy.
why, but it's like suddenly made me really nervous. No, I'm very good. So I'm a financial wellness coach, and I help individuals and couples to harmonize their internal relationship with money, build their confidence, build their capabilities so that they can design a life they love. And, money is this tool that we all have access to. It's funny. It's kind of like we get the keys to this car, but no driving lessons. So my goal is to try and give you the driving lessons that you missed out, so then you can drive to the place that you want to go.
That's a great analogy. I love that. Thank you so much. I really appreciate it. Where can people find your pages, your information? How can they access your services?
Yeah, so my business website is www.innermoneyjourney.com. I've also got my personal website, which is betsywestcott.com. And on Insta, you can find me at Inner Money Journey, at Betsy Westcott. On LinkedIn, I'm at Betsy Westcott. And I don't really do Facebook. So, and I also have a TikTok account that I occasionally drop into, but I think
you're not doing money dances, are you?
Oh, hell no. This is my problem. I get inspired to create a video like once in a blue moon. So I'm probably like just the most millennial TikTok user out there. Yeah. Sorry, Gen Z.
Thank you. I really appreciate your time. And yeah, this has been awesome. So
fun.
If you've ever got a situation, I know you've got this platform launching, but make sure you share that with us. We'd love to share it with our network as well. So yes. Thank you. Thanks, Betsy.
Thanks.
Thank you.